Welcome back to XRP Insider, the channel where we break down the biggest XRP stories, the latest Ripple developments, and the news that could impact the future of digital assets. Today's headline is one that has the entire XRP community talking. You've probably seen people all over social media asking the same question. Do you really need 4,211 XRP by July 4th? We're going to dive deep into that discussion, but we're also covering some major developments involving XRP ETFs, Ripple's growing influence in traditional finance, institutional adoption, tokenization, stablecoins, and why some industry leaders are becoming increasingly vocal about XRP's role in the future financial system. There is a lot happening right now, and if you're an XRP holder, you're going to want to stay all the way until the end because some of these developments are getting very difficult for the broader market to ignore. One of the biggest conversations recently came from a major financial interview discussing XRP and the growing interest surrounding XRP-related investment products. The discussion focused on the newly launched leveraged XRP ETF products and who exactly is buying them. What stood out wasn't necessarily the trading volume itself, although the numbers were impressive. What really stood out was the acknowledgement of the XRP community. Once again, mainstream financial media was forced to recognize what XRP supporters have known for years. This community is one of the most passionate, resilient, and committed groups in the entire crypto industry. Despite years of legal uncertainty, regulatory battles, negative headlines, and constant criticism, XRP holders remained engaged. They continued researching, learning, and supporting the ecosystem while many others moved from one trend to the next. That dedication is something even traditional financial firms are now openly discussing. The ETF conversation also revealed something very important about market demand. These leverage products are designed for short-term traders, not long-term investors. They are intended for people making daily trading decisions and attempting to capitalize on short-term price movements. Yet despite being highly specialized products, they still generated significant interest. Think about that for a second. If a leveraged trading product connected to XRP can attract millions of dollars in volume, imagine what happens when broader investment vehicles become available to larger pools of capital. Many investors believe that institutional demand is still in its early stages, and products like these may only represent the first wave of financial instruments connected to XRP. Whether someone agrees or disagrees with that outlook, it's becoming increasingly clear that traditional finance is paying attention. Another fascinating moment came when questions were raised about the risk profile of XRP compared to traditional assets. This is where the conversation becomes interesting, because many people automatically assume cryptocurrencies are always the riskier option. However, recent market performance has challenged some of those assumptions. We've seen major publicly traded companies experience massive volatility, sharp corrections, and dramatic price swings. Meanwhile, XRP has spent extended periods consolidating and building support zones. The point isn't that one asset is guaranteed to outperform another. The point is that the investment world is changing rapidly, and the traditional narratives surrounding risk are no longer as simple as they once appeared. Investors are increasingly comparing digital assets and traditional equities side by side, rather than viewing them as completely separate categories. One of the most revealing parts of the discussion centered around regulatory leadership and the changing environment for cryptocurrency innovation. Industry executives openly stated that the biggest obstacle to crypto growth wasn't necessarily the technology itself. Instead, it was often the regulatory uncertainty surrounding the industry. For years, companies struggled to navigate unclear guidelines, inconsistent enforcement actions, and shifting expectations. Now, many believe that the environment is becoming more predictable. Whether you agree with every policy change or not, there is no denying that sentiment has shifted dramatically compared to just a few years ago. The result is that companies are becoming more willing to launch products, pursue partnerships, and invest in blockchain infrastructure. Then came a moment that XRP supporters have been waiting years to hear on mainstream financial television. A host suggested that the primary use case for XRP might simply be speculation. Almost immediately, that narrative was challenged. Industry representatives pointed directly to utility, transaction efficiency, and real-world financial applications. This is a critical distinction because the XRP community has spent years arguing that utility matters. While price action attracts attention, utility creates long-term value. The argument isn't that speculation doesn't exist. Every financial market contains speculation. The argument is that XRP was designed to solve actual problems involving payments, settlement, liquidity, and financial infrastructure. Those use cases continue expanding as blockchain adoption grows. What makes this discussion even more significant is Ripple's ongoing evolution beyond its original focus. Many people still associate Ripple exclusively with cross-border payments, but the company has been steadily expanding its vision. Tokenization has become one of the biggest themes in global finance. Institutions are exploring ways to tokenize real-world assets, improve settlement efficiency, and create more transparent financial systems. Ripple has positioned itself directly within that conversation. As tokenization gains momentum, XRP and the XRP Ledger continue appearing in discussions involving the future architecture of digital finance. This doesn't guarantee success, but it certainly explains why so many institutions continue monitoring developments within the ecosystem. Another statement that generated attention was the strong endorsement of Ripple's leadership and professionalism. Industry executives described their interactions with Ripple as highly professional and emphasized confidence in the company's ability to execute its long-term vision. That's important because large institutions care deeply about credibility, reliability, and operational excellence. Technology alone is rarely enough. Institutions want partners they can trust. They want infrastructure providers capable of supporting enterprise-level operations. Positive comments from experienced financial professionals help reinforce Ripple's reputation within those circles. It also demonstrates that conversations around XRP are increasingly moving beyond retail speculation and into broader discussions about financial infrastructure. Now let's talk about one of the biggest themes driving excitement throughout the XRP community: utility and transaction volume. Reports continue highlighting substantial activity occurring across the XRP ledger. Every time new transaction statistics emerge, they remind people why speed, efficiency, and scalability matter. In a world where financial transactions often involve delays, intermediaries, and significant costs, blockchain networks capable of processing transactions quickly become increasingly attractive. XRP supporters frequently point to these strengths when discussing long-term adoption. Whether the conversation involves payments, remittances, settlement, or tokenized assets, transaction efficiency remains a central piece of the value proposition. The broader digital asset market is also experiencing a shift toward utility-focused projects. During recent discussions, several cryptocurrencies were mentioned as having strong long-term potential due to their technological capabilities. However, XRP consistently remained at the center of the conversation because of its established ecosystem and growing institutional visibility. While many projects promise future utility, XRP already has years of development, infrastructure growth, and enterprise engagement behind it. That doesn't mean competitors should be ignored. It simply means XRP occupies a unique position within the market, especially as conversations increasingly focus on real-world applications rather than hype cycles. One of the most exciting developments involves tokenized real-world assets. Across the financial industry, there is growing recognition that tokenization could fundamentally transform how assets are issued, traded, settled, and managed. Real estate, bonds, commodities, equities, and other financial instruments may eventually exist within tokenized environments. This trend is attracting attention from banks, asset managers, regulators, and technology providers around the world. Ripple and the XRP Ledger continue appearing in these discussions because of their focus on efficiency and interoperability. As tokenization moves from theory to implementation, investors are watching closely to see which blockchain ecosystems become foundational components of this new financial landscape. A particularly interesting example emerged from discussions involving large financial institutions and collateral management systems. Demonstrations showed how digital assets and stablecoins could facilitate near-instant settlement and collateral transfers. Participants emphasized how quickly exposures could be covered and how efficiently assets could move between parties. Traditional financial processes often involve delays, reconciliation requirements, and operational complexity. Distributed ledger technology offers an alternative model. The significance here isn't just the technology itself, it's the fact that major institutions are actively experimenting with these systems. Every successful demonstration increases confidence that blockchain-based solutions can operate within real-world financial environments. Stablecoins have also become a major focus. What was once considered a niche segment of the cryptocurrency market has evolved into one of the most important areas of digital finance. Financial institutions increasingly recognize stablecoins as useful tools for settlement, liquidity management, and transactional efficiency. Several major initiatives now involve expanding stablecoin functionality across multiple blockchain networks. The inclusion of XRP-related infrastructure in these conversations demonstrates the ecosystem's growing relevance. As stablecoin adoption accelerates globally, networks capable of supporting large-scale financial activity may become increasingly valuable components of the digital economy. Another major development comes from banking regulators clarifying the permissibility of certain crypto-related activities. This is a huge deal because regulatory clarity has long been one of the industry's biggest challenges. When banks receive clearer guidance regarding custody, stablecoins, blockchain infrastructure, and digital asset services, uncertainty begins to decrease. That reduction in uncertainty often encourages experimentation, investment, and innovation. Financial institutions generally move cautiously, but clearer rules provide a stronger foundation for participation. Many observers believe these developments could accelerate institutional involvement across the digital asset sector over the coming years. Risk management continues to play a central role in these conversations. Banks are not interested in unnecessary exposure. They want solutions that reduce operational risk while improving efficiency. This is one reason infrastructure providers have become so important. Rather than building everything internally, many institutions prefer partnering with experienced technology providers that specialize in blockchain infrastructure, custody, security, and compliance. Ripple's growing suite of services positions the company as a potential participant in this evolving ecosystem. As institutions evaluate various solutions, risk management considerations will likely influence adoption decisions just as much as technological capabilities. One topic that remains fascinating is the evolution of offline payment capabilities. While many people take internet connectivity for granted, there are situations where reliable access simply isn't available. Solutions enabling secure transactions without constant connectivity could play an important role in future payment systems. Demonstrations involving XRP-based technologies have explored how transactions might be authorized and processed even during temporary connectivity disruptions. While these systems are still evolving, they highlight the level of innovation occurring behind the scenes. The future financial system will likely require flexibility, resilience, and accessibility across a wide range of operating environments. So let's return to the question that sparked today's video. Do you really need 4,211 XRP by July 4th? The truth is that no one can tell you exactly how much XRP you need, and no specific number guarantees wealth, success, or financial freedom. Numbers like 4,211 often emerge from community calculations, future valuation models, or personal accumulation targets. What matters more is understanding why people are having this conversation in the first place. The reason is simple. More investors are beginning to believe that XRP's future may look very different from its past. Between ETF developments, institutional experimentation, tokenization growth, stablecoin expansion, regulatory clarity, and Ripple's increasing involvement in financial infrastructure, many believe the foundation for long-term adoption is becoming stronger. Whether that ultimately translates into higher prices remains to be seen. But one thing is clear, the conversation surrounding XRP is getting louder, institutions are paying closer attention, And the next chapter of the XRP story may be far more significant than most people realize today.